Well, good morning, traders. This is the FX Big Dog, and welcome to the market update. If you have any questions regarding this review, please email me. The address is analysis@infinitumfx.com, or do a private chat by clicking onto our website support link on our website. Don't forget, traders, that you can follow me on Twitter. Just search the name FX Big Dog or Infinitum FX on the Twitter website. Important disclaimer. Trading the forex markets is risky and only intended for investors that understand and can afford the risk. Note that this video presentation is for educational purposes and not offering trade recommendations. If you choose to follow a trade presented in this video, it'll be done at your own risk, of which we accept no accountability. We are in an agreement that all traders have a full understanding of the risk and are responsible traders. Do not trade live accounts unless you have traded a successful strategy on a demo account for a good period of time. Alright, traders, without further ado, let's get started with the Great British Pound. And as we can see right now, we are still holding in the short-term down AB swing. The market did pull back to the 382 bounds, gave us double tops right there. With the double tops, we're heading down towards the objection point, which we call the D. Alright, remember, it pulls back to a C pullback and then heads towards the D extension. The D extension is at the 1618. That number is 5858. Alright, so that will be the objection point of the move heading down south. What we'll be looking for is, of course, this support area right here. Look at that, 6113. That is definitely holding support. We did know, or we did figure out, that there is a possibility of a pullback and for it to come back and retest the back side of the trend line. A lot of traders might be panicking and saying, well, this thing's going back up again. Well, not necessarily. It is just retesting the bearish move from yesterday's trading, retesting it, and of course testing the backside of this counter trend line, as I call it, the giving us the goodbye kiss. Remember, traders, if it kisses the trend line, and then turns around and heads back down south, it's what I call the goodbye kiss. So we'll be looking forward to, of course, the close of this 240 candle below the trend line would indicate that resistance is holding and the market is on its way down. Of course, we'd like to see a bearish candle formation form at resistance right here. That'll really inspire the move down south towards the D extension. So the bearish down AB swing on the 240 is holding. Let's take a peek at the 60-minute time frame. Here we have the 60, and as you can see, there's certain levels of resistance here that the market has broken through. But hey, come back to this counter trend line, testing the backside of this counter trend line. We'd like to see, of course, this area right here, 6182. We'd like to see the market trade below 6182. Get below that again, because then we know it's chasing after this objection point right here. And we can go ahead and point it out. It's down here at 59.49. That is the objection point. That is the D extension of the swing, traders. 59.49. Okay, so we'll be looking for 59.49 take effect. We still have not hit the D extension at 60.64. We're still waiting for that to come to effect. But hey, as soon as we get below 61.82, we know that the market then will be chasing off the 61.12, and a break below that support right there would definitely encourage the D extension, which is down at 59.49. Now, don't forget that we have many objection points coming up. Okay, we've got the swing off at. Let's go ahead and compress the charts a little bit so I can pull it up and I'll show you. There it is, yeah, 59.82. We haven't forgotten about 60.64. That is also an objection point that hasn't been hit yet. So heads up, traders, as we hold below this counter trend line. If we hold below the counter trend line, we'll be heading down towards that D extension. Now let's play devil's advocate here and see if we don't break below 61.82. What could be the next move? Well, if we go ahead and put up upward fib levels, we can see it right now. It's testing a 382 bounce here at 61.97. If it does go back up again, we should be testing 63.30, and that is, of course, the downward trend line too. I would think that if we start breaking above this kind of trend line and we do hit the D extension up at that point right there, traders should be thinking, well, we're finding resistance, but the market could probably be in a bit of consolidation. Not a bit, but quite a bit of consolidation. And we're probably holding all the numbers until the non-farm payroll comes out on Friday. So I think Friday might be a key factor if we don't get below 61.11 by the close of today. Remember, traders, we also have at 2 p.m. Eastern Standard Time, we have, of course, the Feds with the minutes. So watch out. Of course, we have the Fed minutes coming out at 2 today, and that is 2 p.m. Eastern Standard Time. We also had the numbers come out this morning at 8:15 Eastern Standard Time. It was the ADP non-farm employment change. It came out higher than expected, but lower than previous. So it does pretty much give some indecision in the market. Traders and investors don't really know how to put this together. But don't forget the FOMC minutes, the meeting minutes, coming out at 2 p.m. Eastern Standard Time. Alright, traders, that pretty much wraps it up for this morning. This is FX Big Dog wishing you joy, peace, and successful trading.